Michael Saylor just dropped a huge insight on Bitcoin's role in the U.S. strategic crypto reserve, and we got some takes from Plan B. And the question on everyone's mind is, are we off to the races, the banana zone, or are we moving into a bear market? Stay tuned. Tired of meme tokens that promise the moon but leave you holding the bag or just rug? It's time to flip the narrative. Flapjacks launch transparently with locked liquidity, token burns, and real-world utility like exclusive fitness perks. This stack is built to last. Forks divide, syrup binds. Join the stack at flapjacks.xyz. Hey guys, welcome back. Drip Coach here with Drip and Farm for Property, where we don't trust, we verify, and operate with integrity and transparency. Today we're breaking down the biggest takeaways from Michael Saylor's latest discussion, including his thoughts on Bitcoin dominance and why the US is expanding its crypto focus and what that means for investors, as well as some information from Plan B. Every month he does his market analysis. And I gotta say, TLDR, spoiler alert, he doesn't sound as bullish as he used to be or as convinced. He did recently move all his Bitcoin holdings into ETFs as well. But I'll give you my thoughts after we listen to these clips. So let's go first to Michael Saylor.
Were you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward as just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset. There's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States.
Yeah.
I want to know what you guys think on that as well, because I've been listening to some other notable people in the space, like Jack Mallers and a couple others that have expressed their sentiment, I guess you could say, about having other assets besides Bitcoin, the strategic reserve. So on the one hand, most of the Bitcoin maxis believe it should be solely Bitcoin, and even some people in the administration, I guess, express that as well. I want to know what you guys' take on it is. I kind of sit in the middle, I guess, partly because I'm selfish and want my bags to pump with the assets like ADA that I'm holding. And then on the other side, I do see the fact that by the US picking certain crypto assets over others to put them in strategic reserve, it makes it look kind of slanted or skewed, or as some people say, those are just the ones that lobbied the heaviest for Trump. It's nothing that we haven't seen before. If you've done your research on TradFi and lobbying in the political space, you know, your Coca-Colas and whatever, Nabisco and all those other ones for Food and Drug Administration, all that stuff will do the hardest lobbying to get their influence spread across the US. So it's nothing different. But because of that, I think you just have to look at it in a different light and kind of make your own decision about what you think is best. Michael Saylor unpacks 4 different types of crypto assets that we're going to explore that I think he does a good job of breaking down and where the opportunity lies. But I want to know what you guys think. Should it be Bitcoin only, or should we have other assets in there? And if we do, who should pick those assets? Let's go to the next clip.
You know, I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States. And ultimately, there's 4 different assets that people need to come to grips with. A digital commodity, like Bitcoin, an asset without an issuer, backed by digital power. A digital currency, like a stable coin, backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond, so we can tokenize Wall Street, and then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy.
I think Michael said.
So that was kind of eye-opening for me. I never really looked at those categories before. So digital commodities, so that's where Bitcoin shines the brightest. Of course, a stable coin that will most likely be USDC, USDT. And then a digital security, so an asset with an issuer. Now, this is where your Solana, your XRP, your Cardano, all of these, even ETH, these are all assets with an issuer, basically, or a controlling party. Like when ETH rolled back the chain during the early days, there are people that control these tokens no matter what they want to claim on decentralization or not. And I forgot what he mentioned on the fourth one, but that does, to me, by having those four categories, it's like, okay, yeah, this is expanding the TradFi market into the digital asset space, and it does provide global participants abilities to gain access to this compounding wealth vehicle that they would not have had access to previously. So I see again the benefit of having other cryptos in this strategic reserve, but it's hard to say who should select that or how that should be selected. And I guess that's where the biggest issue is. But let's move over to Plan B and his announcement, or his latest video that he made for March, basically looking at February and analyzing and seeing where the trends are going for March. And like I said, spoiler alert, he doesn't sound too bullish or hopeful.
Minus 18% dip is a big dip, but it's not unusual for Bitcoin. Bitcoin is very volatile. Even in bull markets, we can have multiple dips that are 20 or even 30% minus. However, it was still an unexpected dip. I expected more all-time highs after January all-time high, and I expected February to be an all-time high as well, above 102,000. So we're really at the crossroads right now. Either we'll have a red hot bull market, a continuation of the bull market, or we enter the distribution phase into a bear phase. So what will it be? I don't know. That's a big question. Was this the top? And is this dip the start of the bear market? Or will we see a V-shaped recovery and more bull market action? And of course, we have seen.
So he does kind of clean this up towards the end of this video, that he does say he still believes we will go higher. But just the way that he kind of laid this out here, it just didn't sound as though he was as hopeful as he was when he laid out the thesis in January and February. So him seeing basically, I'm not going to call it his model being invalidated yet, but not performing as he would have expected for February, that gives him pause, and rightfully so. I am still in the camp basically drinking the Raoul Pal Kool-Aid. I could be completely wrong, but I believe the amount of research this guy has done, and from a macro standpoint of how demographics and debt and central banks and global money supply for him to how that all, and even now with AI and increasing the ability to scale labor exponentially, all this tie, and on top of that, one more, lowering the cost of energy. So all this ties together in his thesis. Again, this is not my work, but his, but I've been listening to it enough to where at least I'm borrowing his knowledge and leveraging his conviction to say that, yeah, I do believe we are still going higher and that it will still follow the same cycle. And then even if you don't understand any of that, logically, the fact that just over or right at a year ago, the ETFs for Bitcoin was approved, and then the top 8 or 10 ETFs, and including what Michael Saylor has done with strategy now, there's just with them alone is outstripping the actual mining supply. And there's still the rest of the world that has yet to kind of figure out how they want to embrace this. So it just doesn't make any logical sense to me that Bitcoin could go lower, and then leveraging the fact that the way that the halving is built in is that the previous cycle highs become the next cycle lows relatively. And that also follows that 2-year realized price here. So let me pull that up real quick. So you have on this chart, the current realized price is 43K, and that tends to typically, if you look at the chart, serve as a floor price for Bitcoin. There's been a couple times in the bear market where we dip below, but typically we don't dip below during the bull market phase. So you see this as we went up here, it stays above that, but when it comes down is where you could see the actual price drop below the realized price. So at this stage right now, the realized price is 43K. And I believe, it will continue to trend upward during this phase. And I don't believe we're entering to a bear market at this stage. Like the fact that we already surpassed previous all-time highs, but haven't gone any higher, would to me signal kind of like what we saw here. So this is the previous all-time high in the 2014 cycle. And then you see right around here, it breaks above, and then it dips back down, breaks above, dips back down, breaks above, dips back down. Then we hit the actual peak in that market, or during that 4-year cycle. Then the same thing over here. It's hard to see. Nope, can't zoom in. Doesn't zoom in like that. Where's this? Nope, won't zoom in anymore. Oh, there we go. Screwing this up. All right, this is better. So in the last cycle, 67 was our double top. 62 here, then 66 and 67 in January of 2021. Then when you come into our current cycle, you see that we broke that previous all-time high right around the halving at 72. Then it dropped back down into the 60s, even into the low 60s, 59. Then it went back up, broke that again, up, broke it again, then back down into the low 50s. So to me, this is par for the course. Like, it's continued to go back below the previous all-time high during this bull market upcycle, but we're not out of it in like saying we're entering into a bear market. Like, it just doesn't make any logical sense. This would be completely unique to the previous Bitcoin cycles and how it's always performed before, and the fact that there's institutional capital that's not introducing any selling pressure, only buying pressure. Like, it just doesn't make any logical sense. So I personally am still doubling down, betting on Bitcoin. That's why you saw my previous video where I took out the loan with Ledden. So I'll be updating you guys on that. In order to pay that back with using only the interest, has to be running for at least 60 days. And the loan to value ratio has got to be below 30%. So I'll need Bitcoin to basically get back around 120, break the previous all-time high at 110, get to about the 120, 130 range. So I believe that will happen, me personally, based off, again, Raoul Pal's thesis and leveraging his knowledge. I believe we'll get there in this second quarter. So I think by the end of March, we should start seeing an uptrend in Bitcoin, but we're going to continue to trade sideways in this range right now. I got marked on my charts between 71 and 91 is still a lot of room for added volume. So I am actually hoping that Bitcoin will drop below the 80K and chop around 75 to 80 so that I can pick up some more Bitcoin in that range. And staying there for a few weeks is actually a good thing. So let me know you guys' thoughts. Are you looking at this? Is it over? Is the bull market phase done, as Plan B said? Or are we still going to see this red hot bull market? Or are we entering into a bear market? All right, smash that HBO special. Help brother out. Like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.